Good day, Junior Tickies. I'm Mrs. Brimacombe. We are going to look now at Activity 5 in Cost Accounting. 5.1 Summer Splash Manufacturers. Summer Splash Manufacturers makes and sell plastic swimming pools. The financial year ends 28 February 2022. Required: calculate the value of the raw materials that were issued to the factory for the year ended 28 February 2022. So take note, they didn't ask you to complete the direct materials note. They've asked you just to calculate what was the raw materials that were issued. 5.1.2 Complete the direct labor cost and the factory overhead note. 5.1.3 Complete the production cost statement for Summer Splash for the year ended 28 February 2022. And then question number 4, Summer Splash Manufacturers buys from overseas suppliers. Upon investigation, it was found that most of the raw materials used in the production process can be obtained from local suppliers. Explain one possible reason why local suppliers should be used. So then they provided you with the information given. As mentioned before, make sure that you familiarize yourself with the information. If now we look at question 5.1.1, calculate the value of raw materials that were issued to the factory for the year ended 28 February 2022. So when they just ask us to calculate the value of the raw materials without completing the direct material cost note, you can just show your calculations by adding or subtracting, or you can do a T account completing the raw materials stock account. Now we're going to start with the opening balance. The closing balance at the end of last year is my opening balance this year. They said to us, raw materials purchased during the year on credit, so that was given to us, but then some materials used are imported and invoice for the purchases was not recorded. The details are as follow. So cost of materials is $2,400. $1 is equivalent to 17 Rand. Import duty is 10% of the purchase amount. Transport cost is 8,300. So this means this has been omitted and we now need to add it. But now your step number 1 is to find out what is the value in rands. This is why we take 2,400 for $2,400 and we have to times it by 17. That equals the total purchase in rands. 10% of that is for import duties, which means we have to take 40,800 times 10%. And then the transport cost, which is your carriage, must be added. Now, the storeroom was left unlocked and 29,000 worth of raw materials was stolen. The loss is regarded as a factory overhead expense. This means we will need to subtract that and show loss, 29,000, and then it will be shown in your factory overhead cost account because they said to you, this is regarded the loss as a factory overhead expense. If we look at the balance at the end is given to us, so this means that we can calculate the direct material cost, which is the raw materials that were issued to the factory. Take the debit side minus the credit side. Complete the direct labor cost note and the factory overhead. So now we're looking at all the information related to the direct labor cost. Factory wages, there are 7 employees and they earn a basic salary per month, 15,000. Then we've got the admin manager. We've got one of them, their basic salary and the annual bonus. Take note that factory wages, there's a question mark, which means we need to calculate it. Now it says, all employees belong to a medical aid scheme, which costs $36,000 per person annually. 45% of the total amount paid to the medical aid is deducted from each employee's salary, and the remainder is paid on their behalf by Swimming Splash. UIF is 1% is deducted from the gross salary, further 1% is contributed. An annual bonus were paid to all employees. The owner has set aside a certain amount for bonuses, and this distribution is in the ratio 3:2 for the factory employees and the administration manager respectively. So starting to calculate the factory wages, we've got 7 employees times 15,000 per month. This is why we need to times it by 12. To calculate the bonus, we're going to take the admin manager, that bonus, and we're going to use the ratio that was given. This is why we're going to say 28,000 times 3 divided by 2. Remember, there are different ways in which you can get to exactly the same answer. The medical aid contribution, there's 7 employees, 36,000 is deducted or is paid over per employee, per person. And the business, if 45% is paid by the employee, it means 55% of that amount will be paid by the business. That equals the total medical aid contributions. UIF is 1% of the factory wages. So the direct labor cost, we're going to add the factory wage plus bonus plus medical aid contribution plus UIF contribution. A reminder, the deductions, that which is deducted will go to the fund account. We will always show the direct labor cost, the gross, plus the contributions. Factory overhead cost. We're now going to look at all the transactions related to the factory overhead cost. If we look at the following totals were extracted from the pre-adjustment trial balance on 28 February 2022. So we're going to start by showing those amounts in brackets for each one of them. Take note, bad debts, bank charges, deposit on water and electricity does not form part of your factory overhead cost. In fact, deposit on water and electricity is regarded as a current asset. The storeroom was left unlocked and 29,000 worth of raw materials was stolen. The losses regarded as a factory overhead expense. Remember, we mentioned this earlier, so this must be added to the factory overhead cost. The insurance for March 2022 has been paid in advance, 8,200. Half the insurance is allocated to the factory. Anything which is paid in advance means it doesn't form part of my expense for this year. So we need to subtract that 8,200 from the insurance. Now remember, once we've done the adjustment, half of the insurance is allocated to the factory. This is why we're going to divide it by 2. That equals the total amount for insurance. The factory uses 80% of the water and electricity. The water and electricity account for February 2022 for 6,800 has been received but not yet paid. So if it's still outstanding, it forms part of my expense for this accounting period, which means we need to add it. So we're going to have water and electricity plus 6,800 and then 80% is used in the factory, so we need to times that by 80%. Rates and taxes are allocated according to the floor space ratio, factory, office, and sales. 1,200 square meters, 100 and 200. So, rates and taxes, we're going to say 1,200 divided by 1,500. So we're adding all of that together. And that equals the total rates and taxes for the factory overhead cost. Indirect materials used during the year were in the ratio 3:4 between the factory and the selling and distribution. The following balance were found in the stock accounts. Do not forget about the closing balance at the end of last year and end of this year. Whatever was left over at the end of last year would have been taken out. So whatever is left over for this financial year from the previous year will need to be added. Whatever is left over at the end of this year must be subtracted. Then after we've done the adjustments now, we're going to take the 35,000 and we're going to divide it between the factory and the selling and distribution department. So this is why we say 3 divided by 7. Those two added together equals 7. The rent for February is still outstanding. The rent increased on 1 February 2022 with 700 per month. The rent is allocated according to the floor space ratio, so it's similar to the previous adjustment with regards to rates and taxes. So to find out the rent, whatever is outstanding must be added. So 77,000, which was given to us, divided by 11 because 1 month is still outstanding, equals 7,000. But now it increased with 700 per month, which means that 7,700 needs to be added. And then we calculate it according to the floor space. If we look at depreciation on factory equipment, there were no adjustments, so we just closed the bracket and the total was 58,000. Now we've done all the adjustments with regards to the factory overhead cost. Our next step, we can total that by adding all of those costs equals the total factory overhead cost. A reminder, deposit on water, electricity, bad debt and bank charges does not form part of your factory overhead cost. That's why we left them out. Completing now the production cost statement, we need to use the answers that we've calculated in the previous questions. So this is the part where you can earn a lot of method marks if you make sure that you show the amounts that you've calculated correctly in the production cost statement. So if we look at direct material cost, we've calculated direct labor cost. So we're just transferring the same amount to the production cost statement. Once we've got those two cost accounts, we can calculate our prime cost. Prime cost, direct material plus direct labor. My total factory overhead cost, make sure you transfer the same amount. Now we can calculate our total manufacturing cost. It's my prime cost plus factory overhead cost equals total manufacturing cost. Work in progress at the beginning of the year, that was given to me, 375,000. So now take total manufacturing cost plus the work in progress in the beginning. Now you would notice that work in progress stock at the end is a question mark, which means that we've now got two unknowns. This is why we need to look at the unit cost for the year. They said to us, the number of units produced and sold were 20,000. The cost price of each finished unit manufactured during the financial year was 150. So if we add those, if we take that and we times 250 times 20,000, that equals the total cost of production of finished goods. Now we can calculate the closing stock balance, the difference between those two. So looking now at question 4, explain a possible reason why a local supplier should be used. If we look at possible reasons, we want to support the local businesses. There won't be any import duties which is added to our cost. Lower transport cost if we can get local suppliers. The exchange rate varies, so it means that there will be a variation in our profits. This is now question 5.2. Take note, 5.1 focused on the production cost statement and basically the notes to the production cost statement. 5.2, the focus now is going to be on analysis. Music Drums Limited manufactures music drums. The financial year ends 28 February 2022. Be very careful. Do not use the information in the previous question. This is a separate question that forms part of this activity. Required, explain why it is important to calculate the break-even point. Why are the production staff wages seen as a variable cost, but the factory cleaner's wage is a fixed cost? Calculate the following. Calculate the break-even point. Should Music Drums Limited be satisfied? Consider the break-even point calculation in 5.2.4. Determine the amount the business would need to sell one drum to break even at 5,000 units. So this is a different way in also asking questions related to the break-even point. If we look at the information, the business produced and sold 15,000 units during the year. The following cost was identified for 2022, and the drums are sold at 370 per drum. So if we now look at question number 1, explain the importance, why it is important to calculate the break-even point, so that the owner or manager knows how much products must be produced in order to cover all costs. Break-even point means that we've just broken even. We've just covering our cost. Anything more means that we start making a profit. Anything less means that we're making a loss. Why are the production staff's wages seen as variable cost, but the factory cleaner's wage is a fixed cost? Production staff are paid per unit or per hour, so their labor would change as production levels change. If we look at the factory cleaner is paid a salary regardless of the number of units that is produced. Calculate the following, the factory overhead cost per unit. So if we look at the factory overhead cost per unit, we have to take the total manufacturing cost divided by the number of units that were produced. That will equal the unit cost. To calculate the total fixed cost, fixed cost consists out of your factory overhead cost and your administration cost. So have a look at how the information is given. They said to you, from the total administration cost, 270,000 is fixed. The rest is variable. This means we're going to take 270,000 plus the factory overhead cost. To calculate the variable cost per unit, we need to take now the administration cost, 342,000, minus 270,000. Then we're going to say divided by 15,000 units because we want the variable cost per unit, and then we're going to add the direct material cost and direct labor cost. So they've given that to you, 198. So we're just going to add that. And then we have to use the selling and distribution cost. This is important that you understand. There are 5 cost accounts. Those are divided into fixed cost and variable cost. Your fixed cost will always be your administration and your factory overhead cost. Variable cost will consist out of your selling and distribution cost, direct material cost, direct labor cost. So my total is 258.40. Calculate now question 5.2.4, the break-even point. So to calculate the break-even point, we're now going to use the figures that we've calculated in the previous question. It is the total fixed cost divided by the selling price per unit, per drum, minus the variable cost per unit. So again, selling price minus variable cost per unit equals the contribution per unit. So my break-even point is 12,526.9. So if we round this up, 12,527. The next part to this question, should Music Drums Limited be satisfied with their current production of 15,000 units? So you need to make sure that you based it on your calculation with the break-even point. And based on that, yes, they produced 2,473 units more than what is required to break even. 5.2.5, considering the break-even point calculation in 5.2.4, determine the amount the business would need to sell one drum to break even at 5,000 units. So how do we approach this now? We use the same figures as above, which is the total fixed cost. But now we want to know what is the selling price. So this becomes our X. The variable cost per unit stays the same. And we want now to know if 5,000 units is our break-even point. That now is given. We now need to find out what will be the selling price per drum. So this becomes our X. This means we need to solve X. So this is a little bit of mathematical skills involved. So our selling price would then be 538. Thank you very much. Next, we're going to look at Activity 6. And in Activity 6, we are going to see how inventory systems valuating of our stock, FIFO or weighted average, for example, can be incorporated into manufacturing. I want to leave you with this quote. Start by doing what's necessary, then do what's possible, and suddenly you are doing the impossible. Have a wonderful day.